What's up, guys? This is Evan here from Hef Trade. Just wanted to put on a quick trade for you today. That way you can see some of the trades that I'm putting on in my portfolio. So I'm deciding to go with an earnings play for Target. Target announces their earnings on February 28th, and as of the recording of this video, it's February 23rd. So just about 5 days until Target will come out with their earnings. As you can see on the screen, I have the ticker symbol TGT on my Thinkorswim platform, which I use only for charting. And you can see down here, this symbol indicates that Target will have earnings on around February 28th. What I'm looking for in my Tastyworks platform, and I'll hop over there just now, is an Iron Condor. So let's jump over to the Tastyworks here, and you will see I have the options chain open for March 17. And I have an order queued up for an Iron Condor here. An Iron Condor is when you want to short the stock at the put and then do another short stock at do a short option at the put for 145 and then do a short call option. This time it's going to be the 185, and then you buy wings on the outsides for protection, the protection being 140 and 190. Since the width of these strikes is at $5 wide, the maximum profit potential for this trade would be $500. But since you have to have risk in order to have reward, you have to give up some of that profit you have to have some loss potential to make some profit. So the profit that I'm targeting in this trade is, as you can see, between 145 and 185. If the stock stays between $145 and down here, if it stays underneath $185, I can realize a maximum profit, which is showing on the screen right here, at $129 for a total outlay of $370, the combination of those two being $500. So this trade, going to put this on just now, and we'll see if this goes through. Looking at our probability of profit, it's around 70%. So this is a pretty high probability trade. The P50 is around 70 to 80%. So I'll be able to realize 50% of this profit with about a 80% certainty. So I should be able to take this trade off once it gets around $60 to $65, somewhere around there. So let's see if this trade goes through. Before I do, I'd like to analyze the technicals on the chart to see if what I'm looking for qualifies as a good trade. So, like I said, I queued up the 145 and the 140 put credit spread at the bottom, and the 180, 185 call credit spread at the top. So let's just triple double check right here. In fact, it's the 185, 190, so it's even better. So 185 and 190 to the top. So on the technicals, what the chart is telling us is that here back in February 2nd, and you can see the dates are up here if you're new to Thinkorswim, the highest that Target reached was $181, and you can see that price here on the right side. $181 was the highest price. This would be what you'd be calling a resistance level. This is where the stock price got too expensive and people decided to sell. You can see that happen several times in the last few months. Over here, it reached about 180, and over here, it reached its all-time high for the past year at $183. So my assumption being that $185 is going to be above where the strike price of my Iron Condor is going to be. I don't believe the stock price is going to exceed 185. It would have to break through this resistance level in order for that to be possible. The majority of the risk seems to be now at the downside. So let's analyze the downside here. We are going to put on the 145, 140 put credit spread, and the 140 is currently guarded just a little bit from some support here at the bottom. So support is an area that's at the bottom of the chart that shows you that the price has reached a low point in the past and people are interested in buying. And so that seems to be the case right around this area. Back in September, people were interested in buying around 146. Again, down here in October, it reached 145, 146 again, and so people were interested in buying. The one area we are concerned about here is this low side at 140. So this could end up being the danger spot to this trade, is if it reaches all the way down to 140. Now, currently the stock is trending a little bit lower, and so that is something to be wary of. With the current economic situations of the United States economy, I would be a little bit hesitant to think that Target's earnings are going to come out to be all but anything, all positive, all roses and butterflies. So maybe it's a good idea to skew this to the downside just a touch before we make this trade. So what I'll do is I look at the delta value over here. The delta value tells us what our probability of profit is going to be, and this is about an 18% chance that the price of the stock is going to exceed 185. So I'll be willing to take on just a little bit more risk to the upside to see if we can move our downside strikes lower. So let's move this down inside of the 1 standard deviation, and this blue line down here represents 1 standard deviation, and as you can see at the top, this also represents 1 standard deviation. Well, in exchange for moving down a little bit lower on the top side, I decide that we're going to move down a little bit lower on the bottom side. So we're going to move this 140 down to 135, and 145 down to 140. Still gives us a decent credit, $142 total credit here, and that gives us $5 extra room to be correct in this trade. Notice here the delta is at 0.10, which means that we have about a 90% probability that it's going to stay above this 140 strike. With that 140 potential profit being our potential to make money here, I think that sounds like a good trade-off to take some heat on the upside to forgive us on the downside. So last double check on the chart here. Yep, 140 to be the low side, and then 180 to be the upside. I think that looks a good trade to me. With about 4 minutes left to go, let's put this trade on. So I'm going to go over here to my review and send. I see that 138 is the total that they are taking for this order right now. We see that it's in the March cycle, just making all of our final checks. Clicking on review here, it's going to take about $367 in buying power with the max potential credit of $137. After commissions, $132. Let's click send order and see if this goes through. All right, we got instantly filled on this trade, and so what we're looking to see is that Walmart or Target stays in between 140 and 180 by the expiration date, which is set for March 17 of 2023. I'll cue you guys back in when that comes around. This has been Evan from Hef Trade. If you enjoyed this video, click the like button. Please subscribe below if you'd like to see more. And as an added bonus, I am now linking my Simply Wall Street account, and this is what I use to look for stocks that are off the radar. So if you're interested in understanding and discovering more stocks, fundamental analysis, and visual examples of what companies are able to do, please click on the link in the description below. That way you can be referred over to my Simply Wall Street page and sign up yourself to see what all the great things is about. Have a great day.